Hey guys, how you doing? How is everybody doing today? Good morning, afternoon. Let me know if you can hear me and see the screen. Okay, should be fine. But let me know in the chat box and we will start. Breaking the new accounting today, okay. Yeah, it is a holiday. Great. Good morning, guys. It is a holiday in the state. So the US market is closed. Wonderful, thanks. Okay, so just a quick introduction for those of you who are new to the channel and not familiar with myself. I'm Michael. I'm the CEO of Trade a Pool, basically a sister company of The5ers that funds stock traders, equity traders. And I'm here today to share some of my knowledge as a trader and the way at least I see the market. We will analyze the S&P, we will analyze the Nasdaq, some VIX, the volatility index, and of course, if you have any questions, you can drop them in the chat box. And we will look at some currencies as well in a minute. Just before we'll begin, hopefully you all attended, either came to the event that we hosted on Saturday in London. Let me know in the chat box if you were there with us in London last Saturday, like 2 days ago. We had an amazing event. Hundreds of people came. We had 18 speakers, beer, money booth, racing cars. We did a giant festival, and we also went to drink beer also afterwards in a pub. That was an amazing event for us, and the guys, at least that I spoke with, enjoyed that as really much. So we're already thinking of the next one. So hopefully, for those of you who missed that, you will come. And of course, if you want to see some recaps, we streamed it live for 6 hours. Obviously, not all the presentations, but just the general feeling, understanding what happened there. So, and you can see me, by the way, in one of the presentation, one of the lectures that I did about risk management. So if you guys want to check it out, it's within this YouTube channel, the 5ers YouTube channel. Just go to the lives and you will see that 6 hours. So make sure you have enough time for that. Okay, great. Next one in Dubai, you're saying, all right? Might be. I am not a Vietnamese, no, I'm not. Hey Anna, how you doing? That's amazing, Edward. That's great. I wear them yesterday. No worries. For those of you who missed that contest, we will have plenty ahead of us. But it was really amazing, and we loved it, really enjoyed it. The speakers and also the traders. We will return to London, so make sure this time you stay with us. Alrighty, let's talk some trading, right? I'll pull up the chart and we will start analyzing from the beginning. Today, like I said, there's no US market, so basically the futures are moving, but basically the stock market is closed due to the Juneteenth day. So let's look at that. Alrighty, and if you have any questions, feel free to drop them in the chat. I'll make sure to answer all of them. Question, do you prefer set and forget entries or confirmation types? So David, in regarding your question, I usually will stay on top of the trade. I won't do like a set and forget. I will set an alarm, right? Alerts in the system, and then I'll sit down and trade and take that trade and manage it. I'm a discretionary trader, so I really want to see the trade, the way it develops, and how can I try to make the most out of that trade while managing it in live, you know. So I usually want to set and forget. Got it. Okay, S&P. Nasdaq, let's start with that. I'm going to the 4-hour chart, right? 4 hours chart. This is the way that I'm doing it, analyzing the Nasdaq. For those of you who are not familiar with me, I've been trading for many years stocks, day trading stocks, and the way that I do that is first just going to the Nasdaq and the S&P, understanding the the sentiment basically, or the bigger picture, and then I'm scrolling down or to a lower time frame. So just a quick overview of what you can get from the Nasdaq. And I know obviously most of you guys are trading currencies, but as traders we got to keep in mind, especially when you're trading currencies, you got to keep in mind of the futures, right, of the indices of the US market, because this is the king. This is what leads and drive all the other currencies and the economy. So you gotta make sure, even if you're not trading the indices, although it's pretty good to trade them, but even if you're not doing that, just keep in mind that you wanna at least analyze them to get the bigger picture, right? So NQ, the Nasdaq, just been trading for a while now in this channel, in this uptrend channel, and actually broke that lately, broke through that, retested as support, now reaching support again. And in that moment, that's super interesting to analyze it. On one hand, you can get a few things from it, right? We did a great movement to the upside. Now we reaching that support level, and we can actually mark it maybe just a tiny bit below it. You can see that gray area. So that's a major resistance level that didn't hold much, right? Didn't hold much. So we broke through it pretty easily. So I'm expecting it to become support, a major support. So we broke through it. Now when we will go down and basically retest it, we should hold that support level, and that will be the moment we need to understand either the support is holding strongly and pushing us again to the next resistance level, the next liquidity level, and that will be around the 15,600, between 600 to 800. So those are this is the main resistance level. Another option will be try to create like a small head and shoulders. So you can imagine that. Let me zoom in. So it should be something like that. Drop into this level, going up a little bit, and then creating the second shoulder, right? So you will have head, left shoulder and head, and then the right shoulder. And from that point, that could be an easily drop of roughly 400 points. So one scenario will be looking at this head and shoulders, holding support, but the buyers are not coming in strongly to push the price higher. So resistance from that trend line, from the channel line, and dropping down again, probably dropping all the way to 14,600, so roughly 400 points. One option. Second option, we do drop to this support level, makes sense, but buyers are coming and pushing the price higher and reaching all the way up to the 15,600, 700, around this area. Either way can obviously, you can see it either way, but once you will see the drop, try to understand if this support level is actually very aggressive and the buyers are coming in and pushing the price, or you will see like, you know, small candles, not a lot of momentum. Even if we're reaching that support level, you will see a little pump in the price and not a major pump. So the heartbeat of the index will be slower. That should indicate that the buyers are coming, but they're not really aggressive about it. And then you should expect a resistance in this area and a drop, basically creating that head and shoulder pattern. So this is at least the way I looked at it. Besides that, you can see that the MACD is basically a moving average, an indicator that will usually, or at least this is what we want to get from it. We want to see divergence between what the price will show us to the highs or the lows of the MACD. So for those of you who are not familiar with it, it looks like this. You have two highs in the MACD, basically lower highs, right? Creating lower highs. But look at this, the chart, the price actually creating higher highs. So the chart is creating higher highs, going higher, but the MACD getting weaker. So that will show us an indication that the momentum of the buyers in this case is getting weaker. In a lot of the situation that you will see this diversion, that will show us that the price should decline. Now in this case, it's already, in most cases you will see it like this. Let me take the chart a little bit because that's very important. So in most cases, that will be a great place to start looking to short the price. The chart, obviously, if we did reach a major resistance level, it's always come together, right? So make sure we are at the top of the range, reaching a major liquidity level, and then we have this diversion in the MACD. But in our case, that was great until this moment. But in our case, you can see that the MACD already went down pretty significantly from the top. And the price declined, but not too much. In most cases, when the diversion is the right one or a strong one, you will see that the price and the MACD, the fall of the MACD, like this area right here, the fall and the price will go together. So the momentum of the fall will be the same in the MACD and also in the price. So in this case, we already dropped majorly in the MACD, but the price fell, but not too heavily. So this is something like this is like a red point, just to make sure that the price is correlated to the MACD. So you got to pay attention to that as well. So besides that, we obviously have the S&P, and S&P and Nasdaq 90% of the time will work together, will go together. Obviously, sometimes you will have the Nasdaq a bit more aggressive than the S&P, and it will basically pull him up, right? Or the opposite, when the S&P is a bit more aggressive than the Nasdaq. You can easily say that in the last like 4 years or maybe 3 years since the COVID, we saw a major control of the Nasdaq compared to the S&P. So the Nasdaq is the leader by far in this market. And if you would go back like 5, maybe 7 years ago, then the S&P was the leader. In our case, this time, the Nasdaq is definitely in control. And since that, you want to pay attention mostly to the Nasdaq. And the S&P, just give it a little, just keep it in mind. Okay, you guys are writing stuff, so I'll stop for a second just to make sure I'm not missing anything. How cool is that we all here together from all different places in the world. I love it. Nefal, Adrian, you're asking about the fundamental when it comes to scalping. So, just keep it in mind when you go to a lower time frame. When you're scalping, you go to a lower time frame. When you go to a lower time frame, you usually won't give much credit to the fundamental, right? Because the fundamental, generally speaking, will affect the chart, the asset, for a longer term. But you do want to, especially let's say in stocks, in equities, you don't want to pay attention to it. So for example, if a stock is gapping up, moving higher, right? You want to see why. You want to understand the reason. What's the news behind it, the catalyst. Or also in a pair, any type of currency that you will trade, you want to try to understand why today, right now, the pair is moving significantly, but not in a huge big picture of the economic world, but just understanding what drives it right now. So in equities, it's a bit more easy because there's a stock that is gapping up, moving higher because of a new product or because of an upgrade or downgrade, a lawsuit, right? Stuff like that can push it higher or push it down. But try to just understand the idea, just to get the feeling of the momentum. So for example, if I'm trading a 1 minute chart, obviously the macro of the world or even the company doesn't really affect it, right? But it will. But if I know that there's an upgrade coming from Goldman Sachs, for example, or Bank of America, then I'll know that a lot of algos and a lot of traders will try to push it even more. So I know that even if I'm going for a scalp trade, maybe I can leave some chunk in and keep it and let it run, basically, because I know that the momentum should continue. So that's the idea regarding what you asked. Use 3 different time frame, but I usually never understood the role of my middle time frame, like the 30 minutes. Use daily 30 minutes and 5. Okay, so your daily chart will be basically for understanding the levels, right? I'm using 4-hour chart, but you can easily use that daily chart as well. Again, depends what you're trading and what are you aiming for, basically. But generally speaking, you take the daily chart just to understand your liquidity places, right? Your liquidity areas. The 30-minute chart will be also for that, but just your zoom in will give you a little bit more areas of support and resistance. Because on the daily chart, if you take a daily chart, right? Let's do that and compare them. If you take a daily chart, sometimes you won't see the nuances that you will get in a 30-minute chart, right? Because the candles are just consolidating, and then you might miss a strong support level that on the daily chart it will be one big candle, but intraday 30-minute chart will show you that there is a support level. And especially when you trade in a 1 minute or a 5-minute chart to enter the trade, then you definitely want to use that 30 minutes or hourly chart, just to get those levels that you won't see on the daily, right? So this is Nasdaq daily on the left, 30 minutes on the right. So first of all, you can use that for support and resistance. And look at this, right? This is just the uptrend move, but you can easily see it that this area is a major support area, right? It's not just a one line, but this is a major area between the 15,000 to 1550 or 1560. So this is the area that you are missing basically on the daily chart. So this is one thing you can get from 30-minute chart comparing to a daily chart. That's, by the way, a great question. The second thing is look at the behavior of the chart. When you're looking at the daily chart, you just see, bars increasing, moving higher. But let's dive into that and now analyze the pattern and the behavior. For example, right here you see a move to the upside, but look at the waves, like the trend. This goes pretty strong to the upside. And then you have another one going pretty strong, but look what happened on the third wave. And that's an easily one to spot, right? You can see that like we get in a banana shape, right? The third wave getting much weaker than the one before it, like the previous two. And in this case, you don't really understand that when you were basically here on the same day. So you can imagine this candle, this red candle was actually a positive candle during the trading session. Basically that's the high right here. And then we started to drop. So if you're just looking at the daily chart, you're missing that picture, you're missing that nuances that will tell you that the price action is shifting direction. So that's regarding that. Hopefully it makes sense. Okay, what else? Bitcoin also bullish? I don't know. I mean, maybe. I didn't look too much on the Bitcoin, but why you want to trade Bitcoin when you have indices, when you have equities, when you have pairs that the good pairs that can actually move? I don't know. I'm not feeling that. Not feeling that connected to Bitcoin, I guess. I don't know. About pound yen, we will check it out soon. 3 as well. Okay, we got that cover. So David, hopefully I answered that. Do I need the medium term to turn first before going? Okay, not necessarily. Obviously, it depends on what you want to do with the chart, right? What you want to do with the trade. Are you looking for just a tiny scalping, or are you looking for a long term? So that will also important to understand before you enter in the trade, and it will determine if you want to use the daily chart just for the levels, but also to see any reaction on the 30 minutes, for example. But in my eyes, at least, this is what I'm doing is basically, let's say it's a daily chart. I will use that for understanding where is the liquidity, and then on the 30 or the 1 hour chart, just look at the chart of the price section of it and look for other places, other support resistance level that I won't find on the daily chart just because it's consolidating. So that's the idea. All right, so we talked about the Nasdaq. Let's the S&P, like I said, very much the same. Going to a new high, dropping down, MACD creating a negative correlation. Makes sense that we will see a drop, but again, the most important one will be just to understand that liquidity area. Is it strong enough to hold? And the buyers will come and push higher. By the way, that you will see now that you have, for example, on the Nasdaq, now that you have this liquidity area, you will go to a 30-minute chart and see the price section while it bouncing off of that level, right? So if it will drop to that level, and you will see volume increasing, or you will see, as I just mentioned, like a fade, that the trend started to get weaker, you will understand that the buyers can take control, or the opposite. So I would analyze it on a lower time frame once it reached that support level. And remember, I talked about it many times before, but for those of you who are new to the channel or didn't hear it, you can use the VIX, the VX volatility index, representing the put options in Chicago, and basically that will indicate opposite direction from what we will see on the chart of the S&P. So for example, if the VIX is dropping down, the S&P is going higher, or the opposite, the VIX is going up, the S&P is dropping down. And this is very similar to what you will analyze on any kind of asset. Just find support resistance level on the VIX. When it reached that support level, understand that the price should bounce up. And if the VIX going higher, the S&P dropping down. So once you have those two correlated, you can actually understand the direction of the index and the indices, and then it might affect either your trading on the indices or trading with the pairs that will be affected from the S&P and the Nasdaq. So let me take a higher time frame, let's say 4 hour. As you can see, we dropped down, reaching the VIX at around 14 points. What I want to do is basically go to even a bigger time frame, let's say a weekly, just to see where is that major support or resistance level that might block the price and push it higher. Once the VIX is going higher, S&P dropping down. So as you can see, this is again a weekly chart. So I might missing some of the liquidities within that range, but you can see that the next major level will be at around 1250-ish, right? So we still got about 2 points to the downside to reach that major support level where I'm at right now, 1250, 1270. So that could be very interesting to watch. Wait for the VIX to reach those levels between the 1250, 70, and then you understand that the price should pop up. If it will, then it means that the S&P, the Nasdaq will drop down. Obviously, in most cases, when it will work, when the correlation will be perfect aligned, then you will see that the S&P's, the VIX is going higher, and the S&P reaching a resistance level and then dropping down. So you're not just looking at the VIX and understanding and just taking a trade on the S&P because the VIX is dropping to a major support level, but you also have the S&P reaching resistance. So that will be a perfect correlation between the two. So this is what I'm seeing right now. If we'll go maybe to a lower time frame, hourly chart, you can see something also very interesting. The MACD is moving higher while the price is consolidating, right? So price is consolidating while the MACD is moving higher. In most cases, the price will continue to drop because it should create that positive diversion. So the MACD will drop while the price will drop, but that will create new higher lows, right? The low that we will see in the future might be higher, but the price will create a new lower high, right? New lower low, sorry. So basically creating that correlation or negative correlation, positive diversion. And that should indicate that the price will go higher, S&P dropping down. So this is something also to keep in mind. VIX is amazing tool to use. For those of you guys will start using it and watch it, you know, even if you won't trade it, but just analyze it to see how it works, you will get a lot from it. So definitely can recommend that, using the VX. Besides that, let's go to some pairs. So I looked at the dollar CAD. I'm on a weekly chart, and this is something that's very interesting because we are getting into a major support level on the dollar CAD. So you can see that, right? this is a great area to start looking for the upside. So we just reached that, not yet actually, just starting to reach that wicks, those tails. And if we'll drop a little bit more to those areas of the 1.3, right, that should be a great place to start looking to buy the dip. It doesn't have to be on a weekly chart, but once we enter in this area, you know that buyers should come and start buying those dips, because that was amazing support level before, acted as resistance, we broke through it. Now, as we know, technical analysis or chart or price action will usually go the same as history until we see otherwise. So in this case, drop into this support area, looking for buy. This is a weekly, so going into an hourly chart will be a great place to start looking to buy it. And maybe this is a great moment to start to talk a little bit about the risk management. Again, for those of you who maybe missed that celebration that we did on Saturday on YouTube, it was live for 6 hours. Try to catch the full lecture that I did on risk management, or at least the way I'm scaling in. And that could definitely help to take this trade, for example, because you have a major support level, and it's not a level, but area of support. Then what you want to do is basically scale into the trade, right? So you go to hourly chart, you started to buy. If it goes against you, you add more to your position. You're averaging down your position, but as long as you stay within the risk parameters that you had beforehand, right? So before you enter the trade, you gotta understand how much you're willing to risk for that trade. And I explained it again on Saturday celebration that we did here and on the YouTube. So check it out. And basically, once you have that, you can scale into the position, scale into the trade with adding more to your position, even when it goes against you. So this is something that definitely can work here in this dollar CAD environment once the price will reach that support level. Obviously, I don't really know if it will reach that, so it might, tomorrow or today will pop up and that's it. But once we will run into that support level, we should see a bounce up, and that could be a great opportunity just to prepare yourself to it, build that trade, and execute once you see it's happening. Next is about the pound yen. Can you give me a little bit more information? What are you looking at? Obviously, we see that it's popping up the last few we're on a weekly actually, but the last few months went great. Look how beautiful it worked. This resistance level that became support, held as support, became resistant again, play with it, support, resistant. Incredible to see it over and over again. So but try to focus me on what are you looking at, what type of trade you want to take from it, and stuff like that. Basically, on a weekly chart, when you look in, obviously we reached that area of resistance. Yeah. So this is So this is a great area of resistance. One option will be similar to what we just talked about in the CAD, the USD CAD. This is a great area you can start looking to short it, although it's very strong, right? It looks pretty strong, but when you shorting it while you're scaling in, again, within the risk parameters, you will give yourself enough space that even if it will go against you and pop up just a tiny bit more and then will drop, you give yourself that space to stay in that trade, again, as long as you're within the risk parameters. Another option is to let it play with this area and wait for the next one that it should be right here, just a tiny bit. It's a weekly chart, so it's a little bit more than a tiny bit, but that's the area you want to watch for, right? The second one. In both cases, and that's a short play in my eyes. Again, you will need to go to a time frame, a lower time frame, to execute that trade. I guess an hourly chart will be the right one for it, because we do come in from a strong momentum move. But those two areas coming to resistance just makes sense to short it. As long as you keep that boundaries of the risk parameters, you can you can do that. Again, at least this is the way I see it, and the way I would have traded. This is what I do when I trade equities. Most of the time you will see me basically buying the dip or selling the top. This is just me. Obviously, there are so many ways to trade the market, trade any type of asset. But if you ask me, it just look pretty good to the downside, because the resistance here is too strong to just ride it like nothing is there, you know. Let's see dollar yen. Okay. Again, on a weekly chart, okay, on a weekly chart you can see obviously we reached that support, or the area of support, broke through it, and now on those cases, this is a good example to understand the chart from a different angle. For example, here I can't really do anything on the weekly chart or understand from the weekly chart something, because it's pushing higher. That's great, but the next major resistance is only here at around 150, and it's also not obviously it should act as resistance, but it's not like a supply demand area, right? This is just a resistance. You don't really see, let's take the chart. Okay, so you don't really see this area of support, right? This is not the same. This is not the case. You can see that here at around 103, 105, that was a crazy support area, right? But in this case, we will probably see a resistance, but it's not a major one that we can actually count on. And I guess one of the important things you want to do is just focus on the perfect setups, right? Obviously, not all the time we will trade them, but as long as you give yourself that opportunity to trade the perfect setups, then your risk reward will be better, and your success rate will be much higher as well. So in this case, at least when I'm looking at the weekly chart, I don't see anything to do. But I can always create scenarios that maybe in a week or so, or maybe in 6 months or so, because it's a weekly, we will get them. For example, you can see that this resistance area that became support afterwards, right? So there's no doubt in my mind that when one day we will drop to the 127-ish, 124, that will be a place to buy. That will be a buy the dip moment easily on our hourly chart, for example, because that should act as support when we will reach that. If I'm correct on the setup or the idea, and it should be, because this is how the market works and this is how the price action works, then the rest will be to manage the risk properly. So I will define the risk that I'm taking on that trade, and then I will scale in within between 3 to 5 chunks of that risk and other stuff again that I spoke about during the Saturday celebration on our live stream here on the YouTube channel. So try to check it out. And basically, so this could be a great area just to wait for it. You can set an alarm, wait for that area to breach, and then you're good to go. If you want to do something either way about the dollar or yen, then you should go to a lower time frame, for example the hourly chart, and then try to look for that support, that resistance area, or maybe a 4 hour. Okay, so in this case you can start creating something to work with. For example, you can wait until you reach that resistance, right, the support that will become potentially resistant at around 145. We still got 4 points, but around 145 you should definitely expect the price to drop. Obviously I don't know how much it will drop, but it makes sense. We're reaching that support area, and that's something we bounced off of it quite sometimes. Drop, super makes sense that we will see a resistance here. So once you're in that 4 hourly chart and you see that we're getting into that area of resistance, then you drop to a lower time frame, let's say 30 minutes or 15, and look for that entries. Scale in with 3 to 5 chunks. Obviously you already know your risk parameters, and build that trade. Okay. Short in Euro Chief. Okay, let's see that Euro Chief. From Friday. Let's take the 30. Okay. Yeah, so this is something this is something definitely to look at. You short it on Friday, you're saying. So Friday was what, the 16th? Yeah. Okay. So you got into a 1-to-1 ratio. Yeah, so if you have this is a classic one to talk about regarding the risk management. So for example, if you reach that resistance, right, and you short it, that's fine. But now that you see that it goes against you, as long as you still have enough space to add to your position within the risk parameter that you set up before, then you're good to add more, because we still work in that level. We still the sellers are still trying to push lower, right? We still have this area of liquidity at around 97,932 that we're still working on it. So even if it goes against you, as long as you stay within the risk parameters that you set, the dollar risk that you're willing to lose on that trade, let's say you're willing to lose $200 on that trade, and you're down $100, right? So you can still add to your position at around this area, and even if not here, then when it will bounce off to a resistant area like this, the 97, 90 something. So once it will break through that, then you take out and basically get out of the trade. But as long as you within that dollar risk that you're willing to lose, you can add to your position, and that's important to remember. Something that I talked about also in the live event in London basically is that the state, your set of mind, right, should be attacking that trade and not playing offensive. I gave the example of Lionel Messi or LeBron James. They're not going into the court or the field and thinking how they can now lose less, right? Or maybe not losing less, but yeah, basically thinking offensive, right? They're going into the court and they're playing to win. And you should do the same. Even if you're trading a stock or an asset, a trade that won't go to your favor after all, you got to keep in mind that instead of looking to take your partials out, take your profit out, you need to think, where do I add to my trade in order to maximize the trade, right? You already made hopefully a good decision or a good analysis. You took that chart, you analyzed it, you understand where the levels, you have 5 parameters that told you that the price should drop, for example, in this case. And now you just need to attack that trade. You know that you are, obviously not all the time, but you know that you have good success rate, hopefully. And now that you know that, you want to look for the places where you add to your trade and not where I covered and take my profits out. Okay, so you did good when you didn't take that 1-to-1 ratio, because it doesn't make sense to take 1-to-1 ratio. It won't really help for the long run. It could be, okay, you took some profits out, but generally speaking, it's not really makes sense. You want less long in this game, so you need to take more than this. So even if the trade will lose eventually, it's better not to take this 1-to-1 ratio. So what you need to do is basically think of, where do I add to my trade in order to maximize it along the way, either once it dropped down and basically you add more to your trade, or even if it goes against you, as long as you're still within that balance of that P&L that you're willing to lose, that's fine to add more to your position. Again, either here at around this area or just a tiny bit above it. Let me look at it on a 5-minute chart just to get the idea. Because the price is moving kind of strong, but still makes sense that we can drop. So for example, if I'm looking to add more, one place that I would look for will be this. I'm on a 1-minute chart, right? So okay, so this is a great area that I would look for adding more to the position. Not here, waiting for it to break it, because that's a resistance level that became support. We don't want to add on that support. We want to add when we have the resistance, because it's shorting. So wait for it to break it, retest it. Okay, it could be consolidating to the right or just bouncing up just a tiny bit, like pulling back, and then add more to your position. And hopefully you will get that move to the downside. But I won't add more here just because we are right at the support. So it doesn't make sense. Another option will be just adding once we will reach that area of, like I said, 97 something, 97,950. So this is also a place to add more. But if you're looking on a lower time frame, just wait for the break of the support, retest it, wait for that retest, and then add more to the position. Again, this is only the way I see trading. Obviously, I'm not right all the time, but I do have my moments. Alrighty, guys. Hey, Andre. So if you have any questions, feel free to drop them in the box. If not, we will wrap it up. And like I said, go ahead and check the streaming, the live stream that we did. Specifically, my presentation on the risk management part starts at 1:25 in that streaming. So if you want to check it out, I'm biased, but I do recommend it. And besides that, hopefully you will have a great trading session. Remember that today the US market is not open, so the activity even in the currency market will be much lower, and hopefully tomorrow we will have more volatility and we can trade that. That's it, guys. Take care for now. Bye bye.